Today I'm going to give you some easy rules to follow with examples that you can start practicing on the 1 minute time frame and start scalping the market. Welcome back. My name is John. Here we talk about ways to simplify your trading and free you from the belief that trading can't be done. If this is your first time here, hit the subscribe and bell icon so you don't miss another video. Now let's get into it. All right, so today we're going to talk about how to simplify your trading when you're scalping the market. Now, this channel is all about making things simple as possible, and today we're going to do that. So, the first thing we need to do before you can start anything is you're going to need a checklist to hold yourself accountable, where you're going to have all your rules written down that you're going to follow every time. And once you have that, we can begin. Now, the first thing is to mark your area on the 15-minute time frame. Now, to do this doesn't take very long. You already know what we're looking for. We're looking for voids within candles and the high and lows we expect where potentially prices may react. Often you'll see price break through and come back and retest an area before continuing. Sometimes it will reach an area and change direction, and that's often an area that we identify as a void. So once you've had those areas marked up, the next thing we have to do is wait for price to reach those areas. So it's a waiting game. So you may see a lot of opportunities that you missed that you could have taken, but you don't want to pay attention to that. You're just being very specific on where you're targeting. And once price finally comes into that area, then you're going to pay attention. This is when you would go down to the 1 minute time frame and you're watching to see what's happening. Doesn't mean that something will happen when it's there, but this is where you want to pay attention. This is where all the magic happens. So now that we have price in that area, what are the candles doing? Now, what I talk about on this channel is we look for signs of exhaustion, usually followed by an engulfing pattern. Candles come in all different shapes and sizes, so there isn't any one specific one that's better than the other. Now, some people talk about other ones more than others, and you can pick specific patterns that you're comfortable with and choose to use those ones only. But when you start going through the charts, you'll see what most of these patterns have in common is they come into the area, and once they're in that area, you'll see a sign of weakness and then a strong engulfing pattern in the opposite direction, indicating that it's going to change direction. So as long as price is in the key level and you see that your candles are showing signs of weakness and you have an engulfing pattern going in the opposite direction, then that may be an opportunity for you to enter the trade. But if you don't wait for it to come into your area, then that pattern doesn't mean anything. You shouldn't even pay attention to it. You have to repeat this step over and over again And there's going to be times where you're going to lose repetitively. You may win a bunch of times in a row, but keep doing the same thing over and over again. Don't keep changing your style or strategy. Stick with something and follow it. And once you've done it for long enough, then you'll get enough information saved in your journal. You can start analyzing where you can make improvements. Maybe you're going to notice that certain times of the day aren't good for you. Maybe there's a pair that just doesn't work for you at all, so you should eliminate it. Maybe your win rate will go up if you just remove one pair. Now, when we're talking about looking for reversal patterns, like these are examples of what I'm talking about. So you can see some are more aggressive than others. You can see a strong candle going up into the area, and then there's an engulfing pattern. And it didn't really show signs of exhaustion, but that is also another type of entry. It doesn't mean that any of these are still going to work. Price will still continue to go where it chooses to go. But as you can see here, the examples, signs of exhaustion, an engulfing pattern in the opposite direction. And if it's happened in your area, an area where you expect price to react, you would enter the trade just before the close of the candle. Now, the last two on the right are probably the most popular for reversal patterns, and the names can be slightly different depending on the size of the body of the candles. But if you go through the charts and you start looking at key areas, and you will notice that these type of patterns happen in these areas before changing direction and traveling to your take profit. Now, what we'll do is we're going to go take a look at some examples on TradingView, and I'll show you what I'm talking about. All right, so what we're looking at here is the Euro USD 15-minute chart. Now, what you can see is I have a voided area marked off, and you can tell from looking at these two candles how there's a big gap in between, and oftentimes price comes into that area and you don't know exactly where it's going to react, but it comes into that area before changing direction. Now, it doesn't always do that, but it's a potential area where you may see a reversal. And if you start looking through your charts, you're going to notice that this happens over and over again. When you're looking at this, you can see price pushed away, closed, and then came right back into the area. Now, if we drop down to the 1 minute and we take a look, we can see that price came into the area, back into the area, and signs of exhaustion as soon as it came into that area, followed by an engulfing pattern. So right now, this trade is actually still playing out, but if you would have got in the trade, stop loss just above, or you can put it higher if you want, but right now that's almost 9 pips, so this would have been almost a 1-to-1 if you would have targeted this. you would have hit it. Now, if you were going for a larger target, say the bottom of that leg, you would have already moved your stop loss to break even and taken partials. And what would have happened is the trade would have came up and stopped you out. But that's okay because you still would have made something off of it. And this would have only been 11-minute trade. Now, if you would have just targeted the low here and you would have reached that, now you can see that 6-minute trade. So I think it's tempting oftentimes to leave the trade because you see that it works sometimes. And then when you start doing that and you don't follow your set of rules, it's going to come back and work against you. And you're going to start questioning if you're doing the right thing. So just follow your plan. Look for areas where price is going to react and manage your trade the way that you want to manage it. And then just follow that way. Don't keep changing it. So now we're going to take a look at another example. Okay, so what we're looking at now is GBP USD on the 15-minute chart. And you can see that previous structure. We have this area marked off as a potential area where price may react. And price did come back after some time. It left and came back into the area you would have been watching on the 1-minute time frame. Now, if you drop down to the 1-minute chart, what do you see? You can see price comes into the area, signs of exhaustion, an engulfing pattern to the opposite direction. You would have got in on this trade on the close of the candle. And you would have targeted the low. Now, where are we on this? Okay. Okay, so you can see how this worked out. This was a risk to reward to 4.53, which was actually really nice. You would have had to decide, like, let's take a look here. So if you would have been managing this trade, you would have ended up with a small profit. Now, if you would have held on a little bit longer, it wouldn't have stopped you, because usually what I do is once it gets to a 1-to-1, once it hits a 1-to-1, I'm moving my stop loss to break even and I take a partial. So even if I get stopped out, I still make something off the trade. I feel more comfortable doing that. You may want to go for a 1-to-2 before you decide to take anything. And if you did it that way, you would have been able to hit the original target. So this, no matter which way you decide to do this, whatever you decide, you have to follow your rules, and only then you'll be able to find out if this is the best way for you doing it. Because everybody feels a little different about how they want to manage their trades. And I'm just telling you about the way that I do it. And if you want to do it differently, you can adjust it. But Give yourself enough time to follow it a certain way so you can analyze it and decide if you want to modify it in any way and see if you can improve upon it. Okay, so what we're looking at now here is CAD JPY on the 15-minute chart. And you can see again, we marked off areas where we expect price could react. So I look at the bodies, above the bodies, the recent body highs. And you could see where price stalled here before going down. And we expect that price could come back into this area. It doesn't mean that it will, but we're just looking for clues, trying to develop some type of bias on where price may change direction. So you're just not blindly taking trades in any spot on the chart. And we can see here, price came into the area. And if we drop down to the 1-minute chart, we take a look here. What do we see here? We can see price came into the area that we had marked off. Just pushing up, started stalling out, signs of exhaustion, followed by an engulfing pattern in the opposite direction. So we see a bearish pattern, and that may indicate a reversal. So you could have got in on that trade on the close of the candle, and either could have had it above 12 pips or have it a little closer. Well, there's always a risk it could come back and push in again and stop you out. So you have to decide what you want to do. And now what I would be aiming for is the low. And run this across here. We can see that with this trade, that even if you would have managed the trade a 1-to-1, so you would have moved your stop loss to break even and taken partials at a 1-to-1. Usually I take 25% and then just let it run to see if it hits the take profit. Now, if you would have done that, you still wouldn't have been stopped out. You can see that it never came back, even if you moved everything to break even. And the risk to reward was 3.89. So nice trade. And an hour and 40 minutes. So you'll find most things that you do when you're scalping the 1-minute time frame, most trades are under 2 hours. Often less than an hour most of the time. There's nothing that I find that beats this. So just keep practicing this, looking for areas. You may be just interested in the voids or just looking for the highs and lows where price may react. Find something where you can follow each and every time. And just keep in mind, the more opportunities that you decide to add into your trading system. So if you're looking for areas to react here, areas to react there and there and there, the more that you add into it, the higher chances that you have that you could run into a larger string of losses. The more times you add something into it and the more pairs that you watch. So keep that in mind. So don't get discouraged. Wait until you have enough information, enough trades taken in so you can judge what you're doing and see if you can make improvements on it. If you have any questions about this, leave me a comment and I will get back to you. And I hope that you found this helpful and makes things just a little bit easier for you.